Today, an update on the Australian property market. I'm going to go through city by city, what's happening in our various property markets, which areas are starting to rise faster, which areas are actually slowing down, where there's been an increase in actual listings, what does that mean for you as a property investor, and whether the price rises we've seen are actually sustainable or not. We've got a lot to cover, so stay tuned. Hi, it's Nero here, and let's begin by looking at the CoreLogic data for last month and compare it to the previous month. So as we can see here, Sydney prices grew 1.1% last month, up on the 0.9% in the previous month. Now, if you stay with me, I'll explain why that 0.9% is so significant, what people were saying about it, and how it can help you make smart investing decisions going forwards. But let's move on to Melbourne for now. Property prices grew last month 0.5%, up on the 0.3% the previous month. Brisbane leading the way at the moment with price growth of 1.4% last month, no change on the previous month at 1.4%. So if Brisbane can stay consistent with that and average 1.4% per month, that means that annually price growth in Brisbane will be 16.8%. Now that's significant in anyone's books. Adelaide last month grew at 1.1%, down from the 1.4% in the previous month. Does that mean that now Adelaide is a bad place to invest, or that property prices are going to go backwards? Well, when you see what I'm about to share next, you'll be able to make that decision for yourself. Perth property prices grew 1% last month, no change on the previous month, which means that if that continues, Perth property price growth will be 12% for 12 months. This is based on city-wide data. There are clearly pockets in each of these areas that are doing way better, especially in Brisbane, Adelaide and Perth. But at least it gives you a sense of what's going on overall in our property markets. And in general, property price growth is accelerating, and it's leading us to see headlines like this. Sydney house price rise to hit 10% this year as recovery firms up. Sydney house prices resumed rising at a faster clip in August, increasing 1.1% over the month and defying any expectations of a double-dip downturn in values, data from CoreLogic shows. I'll come back to what that means in a moment, but let's keep going. Home values also re-accelerated in Melbourne, Brisbane and Canberra. The rate of Sydney house price growth had eased to 0.9% in July. That was the smallest gain since prices began rising in February and sparked concerns the market was in danger of tipping back into a downturn. You see, as much as I track data and what's happening to property price growth across the country, you can't just look at the rate of acceleration or deceleration and assume then the property prices are going to keep rising or keep falling. You need to look at the fundamentals. And there is no doubt right now that we have some fundamentals that are pointing towards property price growth almost being inevitable. You almost can't stop it. I'll share what some of those fundamentals are in a moment. But the key thing is, moment you see an area that slows down in price growth in 1 month compared to the previous month or the previous 6 months, that doesn't necessarily mean anything. And so when you sometimes see scary headlines, don't be put off. Look at the fundamentals, then look at the data, and then you can make an informed decision as to what's going to happen in the property market. And clearly in Sydney's case, all of this fear about, property prices are going to fall a second time, that's what it means by a double dip fall in prices, they are not going to eventuate. Tim Lawless, CoreLogic Research Director, said while price growth could still ease in the coming months as more listings hit the market, the earlier gains were unlikely to be reversed. It's clear the housing market has moved through its downturn phase and the recovery has spread out. So it's not just in Sydney, it's actually in many parts around the country. And this recovery has become established. So I'd say the risk of a double dip downturn is looking less possible with each month, going by further rises in housing values, he said. Despite tighter lending and lower borrowing capacity, buyers are clearly still finding ways to enter the housing market and absorbing the additional stock. That's the key thing. Yes, we're seeing an increase in listings, but it's not enough to meet the existing demand. That means that if there is a continued increase in listings, it may only affect the rate at which property prices grow. It won't stop property prices growing. And as you can see in this chart, it's Brisbane right now that's leading the way for price growth with 1.5% last month and 4.2% for the quarter. Sydney is second at 3.8% price growth for the quarter. Adelaide third at 3.4%, and then the other capital cities trailing behind. Sydney has led the recovery with home values climbing 8.8% since bottoming out in January this year, inching closer to a 10% gain over 2023 as predicted by Westpac. I'll come back and look at what Westpac have to say in just a moment. Even if prices slow, they're still holding around 1% month on month, so you're looking at well and truly double-digit growth across a market that's unaffordable at a time when lending has tightened and listings are rising, Mr. Lawless said. This is what so many people are concerned about. It's like prices in Sydney are so high, interest rates are the highest they've been in over a decade, and listings are rising. So doesn't that mean the market's going to fall? It doesn't. It's because demand is so much higher than supply. And until supply increases to be over demand, and as you'll see in a moment, that's unlikely to happen, property price growth is just going to keep continuing. Prices will keep rising. And the price growth across our various markets has been quite consistent. In fact, August was the 6th straight month that property prices have risen on average across the country. And if we look at this next chart, which shows how much prices have moved since 12 months ago, we can see that Sydney prices are already higher than they were 12 months ago. So for many people who are waiting for prices to crash, they're actually now further behind because prices have risen. In Melbourne and in Brisbane, prices haven't fully recovered yet. But based on the data I showed you earlier on and how Brisbane is now the fastest growing market in the country of our major capital cities, it seems very likely that Brisbane prices will reach new highs very early in 2024. And along with Sydney, you've also got Adelaide and Perth, where prices are higher now than they were 12 months ago. So whatever crash that was supposed to happen clearly hasn't, and it's not going to happen either going forwards. As you can see in this next chart, dwelling approvals are actually on their way down. We're actually building fewer homes than we were just a couple of years ago, but yet we have more people coming into this country who need a place to live. So with so much demand there and not enough supply, property price growth is likely to keep continuing. And in fact, most Australians would actually agree with this as well. Australians very bullish on house prices. Westpac's latest Housing Pulse shows that Australians have become increasingly bullish on house prices, even though they believe it is a bad time to buy a house due to affordability concerns. So what that shows you is that most Australians realize that property prices are likely to rise even though many people can't afford them simply because we don't have enough houses. So what does that mean for you? It means that if you can afford to buy a property, it certainly seems like now is a good time to do so. So what you can see here in this next chart is the national housing conditions. The black line is showing you turnover, so how many properties are being bought and sold, and the red line is showing you the consumer sentiment index. What you can see is that the black line is still below our long-term average in terms of turnover, but the red line, which is what people believe will happen to property prices, is on the way up, clearly showing you that most Australians right now believe that property prices will keep rising, and that's confirmed in this next chart, which looks at consumer sentiment. You can see the chart on the left, the line is really, really low. What that shows you is that many people don't believe it's the right time for them to buy because of affordability concerns, mainly the high interest rates. But on the right, you can see the red line is actually trending up, which tells you that price expectations, most people do agree that property prices are set to rise. But then what about headlines like this, which say that new home listings now rising faster than demand? This was back in mid-August. And while it's true that listings did increase, when we see this next chart, it actually paints the whole picture. We can see here that in the residential property listings, if you look at the second chart, total listings, we can see that there was an increase, but then it has fallen away again. It's well below the dotted red line, which is our monthly average. So what this shows you is that property prices are rising. They're set to keep rising because of the fundamentals of the Australian property market right now. Demand is significantly higher than supply. We're not building enough properties, and therefore, as I've said before, if you can afford to buy, it certainly seems like now is a great time to buy an investment property, but you do need to be careful. There are some headwinds. There are some areas that are not going to grow as well as others. So if you want to know which areas to avoid while maximizing the best opportunities for you to take advantage of the next property price boom, check out the link in the description to get totally for free the digital and audio version of my book And if you want to book a no obligation 30-minute Zoom consult with me to find out more about our buyer's agency services, you can do that there as well. Otherwise, I'll see you next time.